It's a happy Friday, because I know there certainly is a guy that's not having a very good Friday morning thus far. That's this poor chap, as you've probably read about this morning, Claudio Ranieri, the hero of the hour 298 days ago, was the most successful man, the miracle worker. 5,000 to 1 turned Leicester City into the most unlikely, biggest underdogs into the champions, and 298 days later, he's now sacked. Jim Reed making a good point. Doesn't matter who you are, how successful you are, less than 300 days and he's lost his job. Now, if I put that into US terms, so that means Trump should be finished by August? We'll see. But yeah, so how quickly the tables turn, as one could say. But wish Claudio all the best. Good man. Anyhow, back to the charts and back to markets. So, having a look at things this morning, we've had a bit of a negative Asian session. Before that, though, one of the things that we were talking about in the office yesterday afternoon, when equity markets were selling off during the US hours, it's kind of, that buy the dip mantra. It's where do you get in to get long again? And I think we were talking about this as well when I went over to talk to some of the stage 2 guys. It's kind of, if you're shorting US equities, you got to be thinking at some point you got to be pretty active with managing that in the shorter time frames, because inevitably the same thing happened in what has been happening pretty much at the end of every session, certainly this week. Soon as Europe goes home, the US lifted again back up towards the highs again, all the way up into the close, so at least a final hour of trade in Wall Street. So again, the propensity is for, even we generally have a pattern here forming of negativity at the open, only to be countered by a recovery after Europe go home. That tends to be what's being seen at the moment. So slightly mixed finish in the US led to Asian shares slipping off 1.5 year highs. A couple of remarks from Donald Trump maybe just gaining a little bit of focus here. One of the focal points as well from yesterday was we had the Treasury Secretary Stephen Mnuchin speaking on CNBC. Did say that expected growth in the US to hit a sustainable growth rate of 3% or more towards the end of next year. So they were the kind of still the positive comments, the outlook that he has and what the administration can deliver. However, he did say he saw limited impact from the new administration's policies in this year. And that's broadly as to be expected. By the time things can actually get ratified in Congress and get pushed through, it's not really until 2018 we'll still start to see the real kind of force of any stimulative measure. But I think overall, for me, when we were listening to it, although you didn't see an immediate move in the market, certainly after he finished speaking on CNBC, you started to see a little bit of dollar weakness, a little bit of equity weakness going into the open as well a few hours later. Certainly, I think, if anything, starting to feel a little bit like kicking the can down the road, and details seem to be lacking, and they seem to be just managing the situation rather than any actual formal details coming out. Certainly, though, it just means that the events upcoming in Congress with Trump on the 28th of this month, and then also the corporate tax plans, which we are looking for details to be unveiled in the coming weeks, are going to be all the more important for the markets, particularly in the context with these near record high equity valuations in terms of the US indices at the moment. The other obviously interesting comment is Donald Trump had a Reuters exclusive interview last night, and he's not pulling any punches here. He called China the grand champions of currency manipulation. The interesting thing here is a little bit of that market psychology side of things, in that what's actually happened here is the market now has, in my mind, started to get a little bit used to these quite outlandish type comments from Trump. If you remember about 3, possibly 4 weeks ago, when in a space of about 2 hours, Trump called Germany, Japan and China currency manipulators pretty outright, and that caused quite a big movement in the market. Certainly the euro moved when he said about how the euro was grossly undervalued. Now though, he's kind of upping the rhetoric, but the markets are kind of brushing it aside. You've also had his team around him trying to kind of manage Trump, you could say. Mnuchin himself stopped short of labelling China a manipulator, but said the Treasury would go through the usual processes of looking at currency manipulation across the board. So it's just quite interesting to see that the market seems to be desensitizing slightly, and this was, I think, inevitable at some point, is that you would get used to the fact that Trump isn't going to change, and he's not going anywhere, at least soon. Whether that will be the case in the long run is yet to be seen, but certainly I think that people are getting a little bit more comfortable, so to speak, in the way that he delivers his commentary. Quick look at some other charts though, because there have been some other quite interesting moves. And one thing I'm looking at here is that euro dollar is higher this morning, 25 pips, top left, but cable is pretty flat. And actually, this is probably the reverse of a lot of the moves that we were seeing in the first half of the week. First half of the week was defined by euro weakness on escalation of concerns over France, their yields moving higher, the spreads moving wider, implied volatility moving higher in terms of the currency markets, all indicative of heightened concerns over the situation of the French elections, and particularly the possibility of Le Pen gaining the presidency. However, since that midweek turnaround with the centrist alliance that's been formed for Macron and Bayrou, now it seems to have just negated some of that for the time being, and euro is actually staging a bit of a recovery. This is in context to cable though, which is pretty flat this morning. There are some articles surfacing which I think are interesting. I don't think it's particularly here and now market moving, but it may explain a little bit about the kind of the weighting of the fundamentals behind some of these moves this morning. So there's an article in the FT this morning looking at Germany and Italy. So Berlin and Rome are backing the European Commission's plan to rule out starting trade talks with Britain until the UK gives assurances on the multi-billion euro Brexit bill and citizens' rights. So, you've had, I think it was the Austrian Chancellor was the first European politician to put out there an actual euro monetary value of the cost of divorce of the EU that the UK or Britain would need to pay before entering trade talks, and he put that at 60 billion euros, so a very large amount. And now you're starting to see, now we have a little bit of clarity at least towards the triggering of Article 50. Now the real negotiation tactics start to come in, and of course they're going to be pretty hard ball at the first kind of gambit that's put forward. And so quite interested to see then now the Germans and the Italians kind of following the Austrian lead and being quite forceful in playing that card, and that Britain's going to have to deal with this first if they're even going to consider coming to the table to talk about trade. This of course has been met by Ian Duncan Smith, who's basically, I think his comment to quote was something like, Europe are being like little school children with comments like what they have made. So I'm sure that doesn't really help the process, but it just goes to show, I think, what the future holds. I feel once we go into early April, I think then you're going to start to see volatility pick up in the sterling currency. Talking to one of the traders here who trades the sterling currency, and he was talking to me about how much more difficult sterling's been to trade since it's become a little bit more clarity on the Brexit situation, because the ranges generally have been much more confined, where it's the euro that started to see the bigger moves given the French situation. Now, my kind of advice was to him was just to be patient, because I think that will change come the end of March, going into April. Those larger size price swings, when we were, only about 6 to 8 weeks ago, we were seeing full 100 pip moves were quite common in cable, whereas now that's become quite uncommon. And so that time will come for sure. So it's just quite interesting to see the discrepancy this morning with a bit of recovery in the euro, but cable sitting a little bit flat. They're starting to come back towards each other at the moment, so it's not a great deal. And the dollar a little bit softer. Continuation of some of the move from yesterday means that both pairs are slightly higher on the session. In terms of the other assets though, from this morning, ones that stick out, let's have a quick look at gold. Because if you think about it from a fundamental point of view, we've had a really nice move in gold the last couple of days to the upside. And certainly I'd say you can see this kind of cluster of price action that we had yesterday. The prices tend to gravitate in gold towards these big kind of levels or barriers, so 1200, 1250, 1300 and so on. We've kind of hovered at 1250 before, just taking another move to the upside to test R1 this morning at 1256.5. So, of course, the European election risk is only going to probably escalate. You've got only around 20 days or so until we'll get the Dutch elections, then we've got France to follow. And then you've got the Brexit situation with the triggering of Article 50. At the same time, you've got potentially an environment where a lack of clarity, let's say, any timeframes that get pushed back for any fiscal stimulus to the US is probably only going to lessen the need for the Fed to be aggressive with their interest rate hikes, a more shallow rate trajectory, or that the market perceives to be a slower pace of rate normalization, lends to the hand of then the gold trade as well. So if I'm looking at it on a slightly longer time frame, you can see here this is defining the last couple of years, and really that 1250 was quite an important level, or just sub there at 49, because that was really the support level that gold found before then November, when we had the elections, that Trumpflation move, when we broke below there all the way down to lows that were seen around 1123 before this really strong bounce that we've had. But getting back above 1250 I think is important technically, and I'd be interested to see now where we go on from here. I'd want to see a bit more of a further breakdown on this 1250 over the coming days to follow through on some further potential upside. But with European risk only likely to escalate, you would think the balance of probabilities lies with a move higher from here on. So definitely something to keep an eye on there. And technically shorter time frames, looking at that R1 providing a bit of resistance this morning, so maybe to keep an eye on when we go into the US session. The other chart that I think has been very interesting has been the German Bund. Now look at the Bund over just the last several days. Phenomenal rally that we've had. We've gone from really 163 handle all the way up to 166, and we're rallying again this morning up 31 pips or 31 ticks. So yes, probably helped out a little bit by the fact that European indices are slightly lower, but this has been a really nice upward trend. And if you look at the shorter dated bonds like the Schatz, the rally has been even more aggressive. Technically as well, this week has been significant midweek. So I'm looking at a daily continuation chart here in the Bund. Now we're coming up to the 166 handle. Any higher, keeping an eye on 36, which would be all the way back to really September highs that we've been trading in the Bund. But you can see that break of the highest year-to-date level, which is printed pretty much at the beginning of the year for the Bund, and that 165 mark has really catapulted this price higher. So why have Bunds been rising? Well, that again kind of feeds through to similar ongoing macro stories we've just discussed. So the French situation certainly is heightening a bit of a flight to quality, and I guess investors are wary of a deterioration in public finances in the peripheral nations as well, things like Italy, Spain, Portugal. So investors may well sell those bonds to buy a safer alternative, i.e. German debt. You would think then Germany a lot more solid economy overall, and therefore their paper is seen as higher quality or a safer play in parking fixed income or cash into that market, rather than the peripheral nations, which would be more at risk. Greece, for one, for obvious reasons we've seen with their debt redemptions looming, and France as well on the opposite side with the election risk. The other thing as well is that if the European economy, we've seen in regards to some of the PMI data, has been particularly strong, so signs of improvement on a European level, with many in the market debating whether the ECB will react to signs as well of inflation by reducing the amount of securities it buys to suppress borrowing costs, which would be more net negative, I guess, for the peripheral nations as well, and more positive for the kind of benchmark core European bonds like Bunds. So quite interesting here to see that move. I know obviously there's Jimmy, who's a Bund trader in the Trading Live room. Any of the newer guys, happy for you to talk to him for his views on that product if you're not as familiar with it. But definitely that's seen some of the cleaner moves, I would say, or bigger at least market ranges over the last week for sure. One quite interesting thing is, despite all the kind of jitters we've had over France, check out this morning, you've had French consumer confidence. Doesn't look like they're that worried at this point. They've shrugged off jitters, and sentiment in France is currently tracking at a 10-year high. So households remaining untroubled by the prospect of a major electoral shock in 3 months' time. Consumer confidence at a decade high in France. So just quite interesting to see that, and it's been a continuation really of a trend that's been apparent over the last few years, but the first time back at 100 since when? Really, the kicking off of the financial crisis, so just before that point. Okay, so some other headlines just to be aware of though, just to get you up to speed. RBS this morning, seen lower in the FTSE. Not a big sell-off, I think it was about 2% at the open. RBS plans to cut $2.5 billion of costs after a 9th straight loss. The net loss widened to £6.96 billion. I think this was, if I'm right, it was something, basically they've had multiple consecutive quarters of large losses, and so the market in some respects is used to RBS losing money. That's kind of the sad state of affairs. Well, as you can see here, the next 4 years as it posted its 9th straight annual loss. So in a way, bad news is just accepted in regards to how much the market is desensitized to these types of headlines. So a little bit lower, but the fact that the company continues to try to mitigate that by cutting costs in quite drastic fashion is seen as more proactive in order to stem the tide, if you like. Okay, looking at the calendar for today, it's overall pretty quiet in the morning session. You've got BBA mortgage applications or approvals as they're termed here. They are coming out at 9:30. Again, these are more kind of headline figures that you read in the broadsheets, I guess, as commentators like to talk about the housing market, particularly with the overvalued nature that we're sitting at the moment in the UK, and a slight hesitancy we've seen in purchases going into this kind of uncertain political period coming up with Brexit. So maybe something quite interesting to look out for as we go forward in the months ahead, but certainly something which I don't think you really need to take into too much attention for sterling traders. I would probably rank that down at tier 2, possibly tier 3 data. Otherwise pretty quiet in the morning, and actually no major 130s coming out of the States. Any live traders, if you were looking at the currency markets, you definitely, if you were able to trade, so I know in the Trading Live chat room, CA6, the CAD will see movement on the back of the CPI data. So maybe some of the new guys can just have a look at that when it comes out. Otherwise, you've got the University of Michigan sentiment reading. Don't forget though, this is the final reading, so we're only looking for a very minor upward revision on a median consensus estimate. New home sales later. Again, much was the case with yesterday's. I think it was existing home sales, not expecting too much from that either. So not too much today. Therefore, it will be interested to see how, we've kind of started the session thus far on a slight negative tone in terms of equities are a little soft. However, I wouldn't really read too much into that. Overall, we're still very close to record territory when it comes to these US indices. And again, I don't really see anything to really change my mind in regards to identifying then technically a good point to rejoin another move to the upside. So rather than looking to short, still looking at really where to get long in terms of US equities. Bunds continue to move higher. Obviously, we pointed out that upside level at 36. Maybe just keep an eye on that. And gold as well, if we start to breach R1 and pull further away from the 1250 handle, which we've moved from this morning, I'd definitely be keeping an eye on any further upside gains that could see as well. Okay, final thing is, I know you guys in stage 3 are coming to the final day of your program. So good luck today. One thing I just want to quickly show you is, some of you guys have probably read this already. I've shared the link a couple of times. But this is Jason, who writes an excellent blog called Global Macro Trader. It's the GMAC Trader blogspot. I'll share the link. I'll post it in the chat room when I've finished this briefing. He's going to be updating this. He's going to continue doing it. It's very insightful. He's a guy that's been in the market a long time. His background is more equity specific, but definitely I think that this is a well worthwhile read just to keep you up to date. Talks about things about global macro, about the Fed is the latest piece, European exit fears. So a good macro, short, concise overview from someone who has market experience, and particularly on the equity side going forward. For those of you who want to broaden your knowledge, then I can highly recommend this. So good luck to all of you, and then to Jason as well with continuing on with this blog. We will be reading that with interest going forward. Okay, so gonna cut the briefing there. Look forward to chatting to you in the room, and have a good session. Thank you guys.